Hi there, traders. Welcome to the Daily Market Insight for Tuesday, the 13th of June. Okay, we've finally made it. The US CPI numbers are on the radar. It's going to be a huge week, right? There's unemployment figures coming out of Australia, UK. You've got the US CPI numbers. We've got the Fed, FOMC meeting, interest rate meeting on Wednesday. We've got the ECB meeting as well. It's just, there's something for everyone in every time zone, right? So with this in mind, though, the US CPI number is the key to it, right? This number will tell us a lot about what's going to happen with US equities, and that flows through the global equity markets. It's going to tell us a lot about what the Fed are going to do and the dollar strength or weakness, US dollar. So it's going to set the tone. Okay, I know we've got the FOMC on Wednesday, but this will give us the answers to what potentially is going to happen if we get some variance in the number, stronger or weaker. If it comes out as expected, well, then the pressure is going to shift over to the FOMC. But my bet is that they don't do anything with interest rates, and really weak CPI numbers is our go-to. But let me just show you, there's a whole bunch of things happening technically, so you can actually isolate specific pairs for if we do get weak numbers or strong numbers. Now, I'm going to go into a bit of detail here, so just bear with me, because going through the majors on something like this would be important, and a lot of you may not have actually sort of gone through this process. So to me, looking at the opportunity, now, what I would do first of all is come into the daily charts, right? You want to know, this is more like a long-term trend situation where the US inflation numbers, if they come out with a print in the 3% area, like 3.9%, then we're going to get a significant move down in the US dollar. And that's going to be a big impact, right? So what you want to do is really isolate each individual situation. So first up, right, let me just show you the dollar index. Now, what I'm talking about is the easiest trading opportunities are where there are trend lines present. Okay, and this is a daily trend line. I'll come into the hourlies after this, but that's a liquidity pool that allows us to get into the market at a better rate. Now, the downside here, yeah, there's a lot of room to the downside, and there is a trade here if the numbers are weak, but the entry is more difficult, right? Okay, because you're just getting into the market wherever the hell you can. And since there are no trend lines, there's nothing to sort of grab onto. All right, so when I'm looking at the overall market, okay, yeah, there's a move both ways here, up or down on most of these instruments. The dollar index, you've got a liquidity hub just above the market. So yeah, that's probably an easier trade to get yourself into. All right. Now, all I want to be doing is going through the various pairs and sort of checking out a couple of things, right? We're looking at the overall fundamentals that are factored into these charts. Now, dollar yen, okay, had a nice big move up here. That was September, October 22. It has been sort of just nicely going topside. Is there any sort of easy trading opportunities here? Not really on the dailies. Right, this level here is miles away. So that's just, and don't forget, that doesn't mean there's no opportunity on the hourlies on dollar yen. It just means on the daily charts, we don't have any major sort of liquidity hub around. Dollar Swiss, very similar to the dollar index. We've got a level right close to the market. So really strong US CPI numbers there would really suit a sort of a break trade to the top side there in dollar Swiss. Now, dollar CAD's been doing a lot of different things. Oil has been sort of whipping around the place. A lot of pressure on oil at the moment. But if anything, it's broken down here through a longer-term trend line. It's sort of sitting in limbo, waiting for something to happen. Okay, and obviously this is what's going to happen, the CPI numbers. So to me, the trend is down. The easiest trade would be a trade to the downside. Now, I've got a sort of a yellow horizontal line here. It's a bit of a triple bottom. Okay, let me just delete those lines. You can see where it's sort of just been pulling up ahead of this 133, the figure. Okay, there's got to be some stop losses below that. But in actual fact, you could be looking to get in earlier. But once again, like the dollar index, you don't have any sort of levels close by. If anything, we've got a previous support trend line, which is acting as resistance. Strong US numbers might be an easier trade. But to me, the trend is actually sort of down. You'd be looking for an opportunity to the downside. Now, having a look here at the euro. Now, once again, the euro is so undecided at the moment. We do have the ECB Thursday, but you've got a trend line here on the downside, at least 3 or 4 touches here. It does give us something to work with on the downside. So once again, strong numbers would make an easy trade to the downside. But I mean, I'm sort of still thinking, right? Even though I know there's opportunities up and down, I still think we'll see weaker US numbers. Is there an easy trade here? Well, if we blow it up a little bit, right? You can see it's sort of been topping out here around 108. Okay, so yeah, maybe there's an opportunity here to get in around 108, the figure. That might be a sort of entry level. But I tell you what, it's going to be pretty explosive through that. If you look at, we come through to sterling, right? Look on the overall daily chart. So going back to 2007, right? You see what's been going on. We had this nice bottom out below 105. We're now up in the 125s. Okay, so if I widen that out, gives us a much better look at the daily picture. I tell you what, weak US numbers, we've got a nice trend line here to the top side. It breaks through that. That's around 126, the figure, right? The next key level is up around 132. And if we see weaker, like CPI numbers, like in the 3% area, that means that the Fed are done for interest rate hikes, and it will be the turnaround. I would be expecting that's what the move won't happen in a day. Don't get me wrong, but I think we'll see a significant move higher in euro, sterling, Aussie, Kiwi, and you can see here exactly why. We've got a major trend line right at the level, and there we go. So downside, of course, there's only one line there as well. So potential moves both sides, but sterling is trending higher, right? Once again, the trend is your friend, looking to go with those key opportunities. The Aussie, okay, the Aussie sort of, well, it's not too dissimilar to sterling in a way. Okay, we've been sort of trading sideways. RBA is talking about higher interest rates, and it has broken through a level here. Now, you got one, sort of 2 touches. It wasn't like a super big level, but it's the only one we've got, and it does look like the top side would be a nice move if we got weak US CPI numbers. And that's sort of the same for the Kiwi, although the Kiwi is in the middle of no man's land. I mean, you could sort of argue that there's some sort of pivot line here around 61.50, but it's free to move all over the shop. And don't forget, the Kiwi's got less liquidity than the Aussie, the same as dollar Swiss has got less liquidity than the euro, right? But that's the big picture. Now, if we come back, so that's tells us the whole story. Now, let's just come into the hourlies and have a look closer at where some of these entry levels are. Now, I've got some trend lines drawn here with orange charts. And for those traders sort of just joining us for the first time, they are trend lines, but they are weaker, right? There's probably less liquidity around those, but you can see, you can get an idea where maybe that potential first entry level is on the top side for strong numbers on the dollar index, or on the downside, you're probably looking at below the red trend line, even though you do have that first orange trend line just above it. So as you can see, you drill into the hourlies and you're getting a better picture of what's going on. Okay, so just coming back in here, and you'll see a lot of these instruments, and it's not uncommon leading into a massive number that has ramifications for policy. And this is what it means, policy for the US. But if you think of the global markets, the US is the epicenter, and everything rolls out from there. So this is why it's important. So you start to get instruments that really start to range as we come towards this data. Dollar yen, well, you've got potential levels both sides of the market. If you want to take advantage of those, is it going up or down? Well, overall, it's been going up, but this number will shake the tree somewhat. The dollar Swiss, okay, I was just saying there before on the dailies, we got a level here. It's the same one on the hourly charts, and it does look like it's ready to shoot topside. But, I mean, the top side is an easier trade, once again, with that trend line. Downside, there's plenty of room for it to move down. But, once again, there's no trend lines to use to get that liquidity to get into the market. Okay, so once again, blow those charts up once you know what's going on, because then it's going to make it easier. And this is really important for when you are coming towards trading the opportunity, because you don't need to see where they've been. You just need to know where these trend lines are. So that's why I would really blow out the charts once you've done your analysis and you've worked out what you're looking for, because then it makes it easier to identify the level you're getting in. Now, this is the hourly chart for dollar CAD. As I said, it's a little bit tricky, right? Because oil is now sort of falling, which would really support a stronger dollar CAD. But the Bank of Canada's raised rates. The employment numbers were all right. They're talking about more rate hikes and all this sort of stuff. So the pressure is on the downside. If anything, out of all the instruments, the loonie, right, dollar CAD is probably the trickiest because of that influence of oil. And where it's sitting at the moment, right, it's not exactly easy. You got this previous support trend line, which is acting as resistance up around 134, the figure. And then the next sort of key level here is down around 133. So, yeah, move either side. To me, dollar CAD is out of all of them probably the trickiest, right? Where it's located, and because oil isn't, so if oil was rallying, I'd be all over the downside, but it's not exactly making it easy. Okay, so you come into dollar. This is where you've got to sort of use, right? Technical analysis is very subjective. Now, what we're trying to do is isolate where the liquidity is. What is the key market looking at? And you've got levels here, the euro. Okay, you got that trend line now. Once that broke, there's a little bit of a clean out of stop losses, and then it's been trading sideways. So you wouldn't be wrong at this point, right? You would have moved the trend line up to here once it sort of hit the top and fell back down. Now we've got that little poke higher. You wouldn't be wrong sort of leaving the level there, because that's the only level we've got. And we're looking to get in here, right? So if we see weak US numbers, it's going to blast through this level. There's nothing here up until a couple of hundred points, right? So to me, this is the euro. And I know we've got the ECB and a few other things coming out this week, but instantly on the US CPI numbers, if we get weak US CPI, euro's going to shoot topside for sure. It may be short term because the market will go, you know what? We need to see what the ECB is doing first before we really build these positions up. But instantly, that's what I've got as far as a technical sort of setup for euro. Right, sterling. Okay, I like this this clean out here on the downside. Right, that shakes out a lot of stale longs, which sets us up for a bigger move to the top side. But what we've got is, and this is the tricky part of where sterling is. You can see very clearly we had this trend line and it snapped straight through there, broke up, retraced back down, and then kept on going, right? So the market is looking at it. And the fact that this trend line was acting as support on the way back down adds credibility to the sort of level. But I tell you what, it's pretty tricky, right? Because you've got, like, if we get strong US numbers, okay, downside, yeah, you're probably looking at one of these levels down here to get in. The easier trade would be a snap to the top side. But once again, this is not easy by any stretch, okay? The real level here is up around 126.10. Like, trying to squeeze in a trade here with no trend lines around, you're going to be chasing the market very hard. And when it's set up like this, you see the spreads widen out dramatically and a lot of volatility. So sterling, we sort of know what's going on. It has been trending higher. And we're talking, don't forget about the overall fundamentals. The Bank of England, inflation's out of control. They've got to keep raising rates. Whilst, don't forget, if the US CPI numbers are weak, you got the US contracting and still the UK expanding, right? It should be up at 130. So to me, this is your best level up here to get in, but it's going to be, may have already moved 100 points. Now, I still think it keeps going, but there may be a chance to get in here at a better level if we see weaker US CPI numbers. And the other thing is, and there's always two parts of the equation, right? The thing is, the market here will be long sterling generally because of the fundamental backdrop of the UK versus the US. So if we see really strong US numbers, you're going to see a hell of a clean out to the downside there as well. So the idea is, instead of covering all bases, think of the best trade. Now, the Aussie is probably the easiest one to work out here, okay, in the sense that We've got a trend line. They've been talking about raising interest rates, keep going, all this sort of stuff. Or they're actually wait and see from here. But you've got a trend line very clear. I don't think this trend line will be here. I mean, I expect Aussie to trade sideways through it. Now, downside, which makes it a little bit hard, because if we had the numbers come out now and the US numbers come out strong, we know exactly just to get in here and watch it sort of cruise to the downside. But that's not as easy as it will be, because by the time another, what are we talking here, 12 hours, 12 and a half, 13 hours go past, the currency is going to be over here somewhere, right? So it's not a matter of moving the trend line, but this is a situation. The Aussies are classic, especially for the traders who like a bit of risk. It's set up probably perfect for an OCO, okay, both sides of the market. Now, if I sort of move that trend line, because that high there is the last sort of level we've got, you can almost draw a horizontal trend line there. That may be your entry level if you are looking for weak US CPI numbers, okay, above that level, above 67.70. Now, the situation may be, it may be above that level before the numbers. If that's the case, you know what? You've got to widen out your trade plan, reduce your trade, your lot size, and because it's going to get volatile as hell. If you don't have trend lines close, right, the banks who provide the liquidity aren't going to give you a free ride and just give you liquidity wherever it could be. That's why the trend lines are so important. Kiwi, top side, you're looking around 61, sort of 55, closest level. The Kiwi's a tough one. I mean, it's volatile at the best of times, but really with this trend line on the top side and the trend for weaker US numbers, you got to be thinking top side Kiwi there as well. All right, so that's where we are. So the whole aim of what we're looking for is to really isolate the best instruments to trade around the trend lines, right? I'm sort of really spelling this out for those traders who aren't familiar with what we're doing. Now, the trading day, okay, we've got some numbers here, the sort of some inflation numbers, the final numbers out of Germany. They're usually spot on. Now, we've got the, as we go into the European session, employment numbers out of the UK. Now, this can paint the backdrop for the US CPI numbers, right, which are coming out later. So what we need to be doing is sort of factoring that in. If we get strong UK numbers, now sterling may go up a little bit, but it won't go far because the market will be waiting for the US CPI numbers. Okay, so, but if the US CPI numbers come out weak and we've already had stronger UK employment numbers, well, you're going to see a much more aggressive move on sterling than you are on some of the other instruments, right? And vice versa, if we see weak UK employment numbers, okay, and then we see weak inflation numbers, well, sterling will still go up, but maybe not as aggressive as some of the other instruments as well. So you can get that double whammy. If the sterling numbers go opposite to the US numbers, you get a bigger move. Now, the ZEW numbers, they're a good sentiment, current condition sort of number for the euro. It's the last thing that comes out before the US CPI numbers. So, you know, will that have something to do? It maybe repositions the market. But let's just have a look at the overall numbers here. Actually, let me just come over to the US CPI numbers. So the two core numbers, I was going to say the two core numbers, but these are the US CPI numbers we're looking at. Now, the core numbers are excluding food and fuel, right? But this is the numbers here that the market will react to. Okay, expected 4.1 year on year, 0.2% month on month. Okay, now don't forget the US debt ceiling issue was in there. Consumer sentiments have been a little bit all over the place. Some weaker numbers in the US, there's one or two strong ones, but this is it. If we get a print, and mainly the year on year number is what the Fed has been referring to. If we get a print in the threes, like 3.9 or below, okay, well, you can say that the Fed are done, and that's it, right? That, as in far as interest rate hikes and all that sort of stuff goes, they'll sit on the sidelines, and then, if anything, the market will start factoring in potential cuts, maybe before the end of the year, right? So that's the downside. That's the real big number. I think the year-on-year number is the key number to be looking at. Now, of course, just keep one eye on the course year-on-year number. You don't want some, usually they go together, but as I said, this is the main number we're looking for. Now, the other side of the equation, right? And I am banking on weaker numbers. That's what I'm looking for, right? But if you wanted to be, fair and square, the range here is 4 to 4.5%. Okay, that's the range for this year-on-year number. So to get a move to the top side, as in a strong dollar, you want to be up towards that 4.5%. Even something around 4.3 will get the dollar rocking top side, as in rallying. But above 4.5 is the number that's really going to change the whole picture here, right? Where, we've had equities rallying the last couple of days, on the assumption that we're going to get weaker US CPI numbers and the Fed aren't going to do anything. So that could change the picture dramatically. So that's the sort of spectrum we're looking for. So a 3.9, obviously a lower number here, is below that range. So to me, 3.9 is our ideal situation, or less than that, right? Because the Fed's over, equities will rally aggressively, the dollar will fall across the board, and we've got trading opportunities, and the whole global markets will reposition themselves. Now, let me just cover one other aspect that you probably aren't thinking of, and that is having a number that comes out as expected, right? It's almost like a losing trade, right? Because you're all banked up on the expectations of what's going to happen. We can plan weaker numbers, stronger numbers, but you need to plan a number that comes out as expected. If we do get something that comes out as expected, well, don't forget, it's still probably keeps the Fed on hold, right? The previous number was 4.9%. If it comes out as expected at 4.1, and that's still weak, you probably still get dollar weakness and the equity markets will rally, not as aggressively as though if we had a 3.9, but I still think, and as expected, is a weaker dollar, higher equity markets, right? 3.9%, that's where you get the aggressive move, right? So plan for an aggressive move, plan for as expected. And it also, even if you're not really banking on a stronger number, have a plan. If you see a number that comes out up around 4.3, 4.4, 4.5, you've got to have a plan, because if you're banking on the 3.9, you need to go and cancel your orders, right? Don't leave positions all over the place. Cancel. So to me, I'm aiming for a 3.9 or below 4.1. So my plan is, if I see a number up around 4.3 or above, I will cancel all the orders I have on my platform, and then I'll have a look at the market and reposition myself. If I see a number like 4% would be great, but 3.9, if I see a 3.9, I'm into the trade. I'll have a look, make sure my execution levels are good. I haven't experienced too much slippage, and then I will let the positions run, right? Because that position here has bigger ramifications for a weaker dollar, higher equity markets than anything else. All right. Now, with the execution, right, when you are looking at, as I sort of covered it a bit when we were talking about the charts here. Now, with execution, there's a couple of things you've got to do. Now, some of these instruments, okay, like sterling, actually even Aussie, even sterling, right? These instruments are sort of in the middle of nowhere. It may well be the case you use a pending order to get into the market, right? Now, there's inherent risk with this, because as it comes up to the time of the release, the spreads will widen dramatically. Now, I would be looking to get into the market here, sort of 15 points, okay, above the market, above the current market price. And I'd have a smaller trade size, and, they're pretty much a sort of standard plan, but you could be looking for like 100-point take profit and give yourself some room on the downside, like a 25, 30-point stop loss. That's what you're looking for. But you've got to give yourself some space to allow for the initial volatility at the time of the release. Okay. And there's nothing to say that you don't get kicked in before the number, right? And the number comes out the other way and you get a massive like you get a decent loss, okay, instantly. Like they could widen out. If you go too close to the market, like even say 5 or 10 points from the market, say either side, trying to be a little bit cheeky, you get kicked in and kicked out on the initial spread. Then the move happens. And if it's up here and you've been kicked in and out down here, I tell you what, you're going to be furious with yourself. Well, you'll probably be furious with the market. You won't blame yourself and you'll start over trading at that point. And I tell you what, you're in a bad state to be getting into it. So when I look at the markets like this, I am looking for opportunities primarily, okay, with trend lines close. This takes out a lot of risk around the event, all right? Okay, now for those traders who are looking to sort of understand a bit more about what I'm talking about, the advanced day trading course, if you come over to that, you can sort of get yourself a bit organized and plan around the event. And what I'm talking about is the extremely high impacting news releases. Okay, now the trade plan for extremely high impacting news releases, trading the CPI. That's exactly what we're doing. And have a look through these videos because they will explain very clearly what you need to be doing and what you need to be focusing on. Okay, especially giving you a very clear trade plan around those events. Okay, so a nice little one to refresh yourself ahead of the numbers. And that's pretty much all she wrote. I know this is a bit of a long webinar, but it's the preview you need to get yourself in a very calm state. Do all your planning hours beforehand. So when it comes up time to the release, all you need to do is turn the screens on and look at the numbers. Okay, so you get the core numbers. Don't forget they are excluding fuel and food. The main numbers here, 0.2, 4.1, right? Understand the range of the data expected. Obviously, keep a very close eye on the expectations, and then start planning what happens for a lower number, say like 3.9, okay, or up to 4.5. Are there trading opportunities on different pairs? Yes, there will be, according to where the trend lines are. All right. Now, this is a huge event, right? As I said, using pending orders, I'll be using some on various pairs to get into the trade because I won't be able to trade quick enough. So plan your capital sort of expenditure, right? So that means planning around the release itself and making sure that you don't have, think of it, when you put a trade on, if you lose, right, it needs to be within your loss parameters. You don't want to have a big trade here and have a massive kerfuffle on execution because liquidity disappeared, you got stopped out, and and you've got a headache, you're nursing a headache, right? Plan around a difficult trading situation and make sure you just trade within limits. The idea is to make money. We'll make a lot more money out of the flow-on effect from this event than just the event. But this is a trading event. Don't be mistaken. The Asian session here starting. We got a risk-on profile, very clear on Euro, Sterling, Aussie, Kiwi, and a weaker dollar. I mean, it is just the start of the session. They've only moved a few pips, but the writing's on the wall. But leading into a big event like this, I tell you what, I like to see this, right? Commodities cruising topside, dollar coming off, equities going up. This is telling me the market is still very confident with a weak CPI, which means the Fed remains on hold on Wednesday. Nice, easy markets for everyone to be calm and make some cash. All right, guys, all the best. Now, if all that doesn't make any sense to you, don't forget, jump on the Discord channel there and you can ask some questions and try and get some answers. And the idea is we want to make some cash out of this, right? So pay attention, good luck, and hopefully we'll hear some good stories at the end of it. Cheers, guys. Cheerio.